Hi guys, I'm Elena, the tax advisor at Prism Accounting. Today, as we're approaching the major tax deadline, I want to remind you about a few things that some of you might need to do before lodging your tax return. Number one, for private companies, you need to check for any debit loans to shareholders or their associates sitting in the company's balance sheet at 30th of June last year. If these loans remain outstanding, you need to take actions before lodging your company's tax return. If you don't, these loans can potentially be treated as unfranked dividends under the Division 7A provisions. That means that these amounts will effectively be double taxed. Other examples where the Division 7A can apply include situations where you have an unpaid distribution from a trust to a beneficiary company, or where a company provides property to shareholders or their associates for private use. What do you need to do to avoid the penalizing treatment? Basically, you have two options. You can either repay the loan, or you can put in place a compliant Division 7A agreement. Whatever option you choose, it has to be done before the company's tax return is due, or before the actual lodgement, whichever is earlier. Number two, if you had a CGT event happening in the last financial year, you may be able to defer or reduce your capital gain by exercising certain choices available to you under the tax legislation. As a general rule, you must make a choice by the time you lodge your tax return. Some choices have to be made in writing, but generally the way you prepare your tax return is sufficient evidence of your choice. Once you make your choice, you cannot change it. This is why it is important to discuss your options with a qualified advisor to make sure you get the best outcome. Number three, if you made a personal super contribution in the last financial year, before you lodge your tax return, make sure you notify your super fund of your intention to claim a deduction for it. Once they receive your notice of intent, they will provide you a letter confirming the tax-deductible amount. You must wait for the confirmation letter before you are able to claim tax deduction. If you are running out of time to get everything ready before your due date, get in touch with your accountant as soon as possible. They may be able to apply for an extension to give you a bit more time to prepare